Contest. Okay. So as to DM, I just wanted to share this tiny bit of perspective. I can see that there was this very strong uptrend of 165% in a year, and I think this trend is currently in correction. It's taken 50% correction, started showing positive divergence, and I think next leg of rally can potentially begin here. If we look at the daily time frame, also things look pretty bullish to me. So what I want to do is I want to test the trajectory of the previous uptrend. So I am taking a trend line of a different color from the previous one, and I'm connecting the lows. Next, I will clone this trajectory and I will clone this and place it near the high. So I can see this was like a perfect bullish channel, and within the channel itself, I can draw at least one internal trend line, and I'm seeing really good interaction. Now, the decision I want to make is whether I want to trade this trend on the daily time frame as a buy and hold for, then this becomes like a long-term investment, for which if I did that, then my minimum target here would be around 70% over maybe next 1 year. Or do I want to swing trade in this place? So if I swing traded, then what would my entry exit opportunities look like? In order to determine what it might look like in the future, I need to study what it looked like in the past. So for that purpose, I will mark the support resistance zones like this. And for support resistance zone marking, I like to use the previous highs to draw them, because I believe that in the world of support resistance, it is the resistance which comes first, which gets broken, price goes above it, and then support comes. So support and resistance. I'm going to take this up. I'm going to place it here. What am I seeing? Here there was a entry opportunity after which the stock went up. Again, I will map the next high. This resistance again acted as a very good entry point the next time. Repeat. Same thing. This resistance acted as a very important, very good entry point before the next shoot up happened. And then this one. So here again, we saw some consolidation. Yeah, this one. So here again, we saw some consolidation, but this acted as a pretty good entry point. And then here, if I see long consolidation, but again, the previous high acted as a very good entry point. The stock continued to move up. Take this again, place it near the high, and I can again see once this high was established. So this high, this intermittent high did not give an entry. So basically you had to wait. Once this price breached, again, this previous high became a good potential entry point. Now what I want to do is I want to go back to the beginning of this, and I want to take a measure of the price moves that would have been possible to capture. So this is just the first one. I'm just measuring it for the sake of it. So 16.22% in 23 days. Let's use the price and range tool. Next, this was the re-entry point. Just measuring to the high, 23 days and 11%. Re-entry point and high, 17% in 15 days. Again, this was the re-entry point to high, 19% in 16 days. Again, entry point to high, 19% in 8 days. Again, say if we take from the first one, in 63 days, 16%. Again, say let's take it from here, from the middle, 43 days and 28%. And again, retest is our entry point, 17% in 23 days, comes back down to our entry point and again moves up 31%. That's when the trend ended. And what was the signal of the trend ending? Before the last leg of rally, we saw structural breakdown on the 75-minute time frame and a negative divergence, which was a signal that, okay, now stop trading for some time, and then the stock went into correction. But now I started giving positive divergence again. So you can sum up all of these growths and see how swing trading can potentially, what swing trading can potentially deliver against a primary uptrend of 175%.